Hello, and welcome to another episode of the Market Snapshot series. First things first, I would like to apologize for the delay we have had. I'm sure I kept you guys waiting for about 15 minutes. And the main reason this was happening, it was because of the tech connectivity issues. So on one side, I had to verify the Google account with the company, which takes quite a period and it's not scheduled. So you never know when Google is going to ask you to basically verify your account. So it just happened so impromptu. I had to work with some people in the team to get it fixed. Then after getting that sorted, then I had some trouble connecting with Zoom again. So it was quite a hectic beginning for today's session. So thank you guys for being patient. I really appreciate this. So let's get things going. So first things first, let's do a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and this will confirm that everything is working just fine. Hi, Lucy. Hi, Richie. Thank you guys. Thank you for your responses. So let's get this started. First things first, I would like to begin by checking out the economic calendar, see what we are expecting for the day. And once we are through with that, we also look at a couple of chart patterns. And once we are through with that, hopefully we get to identify some trading opportunities. So today's economic calendar doesn't seem that much busy. The main event of the day happened earlier on in the morning at 9 a.m. And this is why we are looking at the UK jobs data. So the claimant count change was 0.9K, meaning that the number of people filing for unemployment insurance was way smaller at 0.9K, which basically shows tightening job market in the UK. And this is for the month of August. So average earnings index was up 8.5%, meaning that wages are growing faster than expected. So in the previous reading, it was 8.4% quarter over year. We were expecting this to slow down to 8.2, but wages are rising faster than anticipated. So the unemployment rate remained at 4.3% as expected. In the previous reading, it was 4.2%. So for what we are gathering from this data is that there is less people filing for unemployment insurance, meaning that the economy is strong and creating even more jobs. And then the average earnings or the wage growth is faster than expected, which basically implies a tight labor market. So tight labor market is not something that the Bank of England is looking to achieve. The Bank of England is looking to achieve softer market conditions. So as a result of that, we could be seeing some speculation. The Bank of England will go for another rate hike on its next meeting. So then we have the German ZEW economic sentiment coming at midday, as well as the ZEW economic sentiment for the entire Eurozone. Then later on, we'll have NFIB, Small Business Index, NIESR, GDP estimate for the UK, and of course, the US 10-year bond auction. So as you can see, there's nothing much happening in the markets today. That is from the economic calendar perspective. So as a result of these, we know it's a technical price action traders territory. So going back to the charts, one thing to notice that has happened this morning is that the European equity indices have started losing after making an impressive rally yesterday. So today, the market really played around this area here, along this trend line. And this is for the Euro 50 index. And then in the last 1 hour, we had a huge drop, which implies we could be having some further downside momentum. And a nice target would be 4,215 for further downside momentum. So other European equity indices include the French 40 index. So as you can see, this equity index was on a strong rally for the last couple of days. But from what we are gathering here is a market that was unable to break. So it really tried to push here yesterday, but every attempt to move higher was met with a selling power. And now it seems likely that the market could be on a downswing. So we could also be seeing the French 40 index moving back downwards. So for the UK 100 index, this one seems extremely strong. And this is after we have seen a very strong labor market, meaning that companies are operating at a much higher capacity. So looking at pound USD, which is the one that is weakening right here against the dollar. So it seems like this was a really strong resistance yesterday. So after the market retesting this area, we are seeing the pound continue to weaken. So this is unexpected. Basically, a tighter labor market would imply that the Bank of England would go for another rate hike, but it seems like the market had already speculated that, and now we are seeing the market going back to retest a key level support that has been tested twice. So on Friday and Thursday last week, this was the support at 1.24496, and now there's a good chance that the market will be retesting this area again. So the dollar index started the day with a very strong momentum upwards right after testing the support area here. So I remember discussing this yesterday, saying that there is a high likelihood that the dollar index will be retesting this area. So after retesting, we had a couple of candlesticks showing strong lower tails, indicating a rejection of lower prices, and then the dollar index resumed the bullish momentum. So as a result of this price action, this may explain why, even if there was news supporting the pound gaining, we are seeing the pound losing to the dollar. So looking at the overall market, you'll notice it's a similar sequence, dollar gaining against the yen, also gaining against the euro. So the euro had attempted to make quite a rally since yesterday, attempted to go up. As you can see, we had a major resistance area here. If I try to highlight it, you will observe it right here. So market finds resistance here, here, and then here. Then after the big pin bar or the shooting star candlestick, you can see the big sell-off. And now the areas in sight remain the support areas in this particular chart. And the most recent one was the low that we saw on Friday. So somewhere around 1.06931. So if the euro continues losing to the dollar, then this could be a nice target. So for USD CAD, we are seeing a lot of sideways momentum happening since yesterday. So if you are a person who is very much interested in trading this particular pair, then you can observe that this is a sideways momentum. So waiting patiently for the break might be the interesting way to observe this. So there's a nice trend line here, and on the lower side, it seems like it's almost getting triangular. So in a triangular kind of setup, you wait for the breakout. And once the breakout happens, that's when you identify your trading opportunity. So this is drawn on a 15 minutes chart. So all you have to do is to be observant and wait to see the direction of the break. So as for gold, we were expecting that this area here, after the pin bar candlestick here, that the price could continue going down. So somehow we got this right yesterday. So the market kept going down. So if I remove all this noise and I try to focus on the last couple of days, then you could see that gold is just consolidating around that area. So if you want to draw trend lines along this area, it would be just something simple along this path, and of course along this path here. So observing the price of gold for the last 4 days, you can see the oscillations between the two trend lines going up and then down and then up, retesting, moving further back downwards. And now we are almost approaching an interesting point which could represent a trading opportunity. So in this case, I would be confident. Let's do a zigzag here. So a zigzag is a really nice indicator because it doesn't tell you where to enter or where to exit. It just basically helps you visualize the swings. So I'll try and find it here. Nice. So you can easily identify the swings, and you can use the swing high, swing low points to draw your trend lines. So as you can see from this current swing, it's not yet perfect. It's not the ideal swing you'd be looking for entry right there. But then if the market gets to this area and then we see signs of bullish entry, then it would represent a trading opportunity. of capturing a swing back upwards. But then if there's a break below this yellow area, then we should be looking for a short selling position. So in this case, it's a game of wait and see, wait what happens to price around this area. And if you find that there is a strong evidence of buyers entering the market, then you can continue trading this pattern that is basically emerging as a sideways consolidation right after gold was on this bullish momentum, broke towards the lower side, and then traded sideways for a couple of days. So we know that a lot of momentum in gold is expected to come from the US inflation data, which is coming up tomorrow. So this is when we will be looking at the US CPI. So as a result of that, it's quite common to see markets trading sideways when we're expecting a major news announcement. So in this case, I would assume that this being a technical price action traders territory, that the market will keep obeying these levels up until it can't continue doing that anymore, since there will be more fuel driving price in a particular direction, whether it's up, down, or even a whipsaw. So moving on, looking at Audi USD, we had a clean break. So as I've been saying, whenever you have this kind of sideways momentum, being patient is the ideal way to approach it. And once you have a break, you have a direction trade. So even if you entered at the break here, or even after the confirmation, there was some nice upswing for you here, all the way to the target area of 0.64393. And now, after the market got to that area, you can see that it's now forming a flag. So a flag formation is very simple to identify. It will be almost like a channel or a range where the market is unable to form higher highs or lower lows. It's majorly almost sideways. And before the formation of that particular formation, there's a very strong, almost vertical movement in price. So if we identify this as our flagpole, then this is our flag, and now we have a break. So if this current candlestick in the 15 minutes chart closes higher, then it basically confirms you have a break, which represents a nice trading opportunity to the next available resistance. So in this case, if you go to the 1 hour chart and you try to identify resistance from the previous highs, then I can see that there are price levels somewhere around this area here. So this is the beginning of the big move downwards. Then also we have this other area here, which could work as very nice targets for this pair. So in this case, looking at this area as a nice target area, there's a good likelihood that if the market breaks higher, it could run for 0.64615, and this is for Audi USD currency pair. So for US equity indices, they were pretty bullish yesterday, as well as on Friday last week. So we saw the market getting back up, and today it's showing some kind of weakness. So remember, there's quite an indifference in the market as people don't know the outcome of the CPI. So there's a very strong speculation that CPI might come in stronger than expected, meaning that US inflation could rise to 3.6% from the previous reading of 3.2%. And as a result of strong inflation, this could lead to the Fed going for another rate hike, or basically being very hawkish. And as a result of that, we could be seeing a stronger dollar and much weaker equities. So in this case, looking at what's happening with the S&P 500, this is the NASDAQ 100. This is what we are looking at, a market that is now forming some form of a rising channel. And from the current price action, it seems like the market is on a downswing right after bouncing off the upper trend line. So we haven't yet gotten to the lower trend line yet. So if we assume that this will continue for the day, then the value area must be somewhere around this area here. So if price drops to this area, then you observe whether there is a buying opportunity or a selling opportunity based on how price behaves around that area. So if there is a rejection of lower prices, there is long lower tails on the candlesticks, then that would mean that we are looking for a buy position. And if there is a clean break, then we trade much lower. So if you look at the US 30, go to the 15 minutes chart and then observe the price action over the last 3 days, then it's kind of a similar situation. This is the highs that the market has been following. And of course, the lows have also been following a similar shape. So from what we are seeing here for the Dow, it's a market that is rejecting lower prices. So a careful investigation of this area here is that this market has been consistently moving towards this lower trend line, got to it the first time, bounced, the second time bounced, and now the market is attempting to clear off that particular trend line. So if we see another candlestick moving higher, then it basically represents a successful bounce, which means that now we target the previous high, which is all the way up. So we could be seeing the market make a rally towards the previous high, and this could mean the price moving to that area. So as for the US 500 is the S&P 500. So we saw this pattern forming here, which is an inverted head and shoulder. Our market eventually broke the neckline, went higher, and now is pulling back downwards. So now if we clear the chart, remove all the noise, then we can see that there is a similar formation in all the three equity indices. So on one side, we have a very strong resistance area that the market has been obeying consistently. And now on this other side, we have another one that the market has not yet hit. So it seems like there is some more downside momentum to be expected in this one before we start looking for a bounce. So the value area would be somewhere around this area here. So once the market gets to this area, this is when we start looking for a bounce or even a break below. So we observe the price action around this area. So as for Brent oil, we have a clean break. So as I said, it's a waiting game. So you're always waiting to see what price will do once it gets to certain levels. So there was an attempted break, failed yesterday. Then today in the morning, the market broke out, retested the area, and is now bouncing higher. So this is what I would identify as a successful break. And if the market closes here on the 1 hour chart, then it indicates that there is a room for now a clean break and another leg towards the upper side. So this represents a nice trading opportunity targeting higher prices for Brent oil. So if you zoom out and look at the last time the price of Brent oil was trading there, it's all the way back. And this is on November 2022. So when you are setting your take profit target, you might have to source all the way back to identify potential price levels where the market could find resistance, since we don't have any. So what I'm seeing here is some previous lows that were acting as support, and now they could be acting as resistance. So now what we are observing here is that the price could rally to that level, and the potential for oil going higher would mean we test the $92.3 per barrel price level. So just a moment. So that's the price level you should be targeting for Brent oil traders. And now after this consolidation, notice it lasted 1, 2, 3, 4, 5. So these 5 straight days. So another way of identifying an entry point and targeting, especially after this consolidation, is measuring the largest swing in the pattern, which is this right here, then using this as the breakout here. So if the market makes this break successfully, then there is also a nice target all the way up at around $93.4 per barrel. So you can use the largest swing of the pattern to identify a new target price, especially after the breakout. So case in point, if you are trading this pattern here, so market is consolidating here, and then it makes a break, then you can use this as your target. So market breaks, and then you target here. So if you traded the breakout here, then you could have set your target around this area. So same case here. If this is the biggest swing, you can use that as a measure of the target for the breakout to the upper side. So let's check to see if there's any questions, and then see how you can respond. So yesterday, the EU, DXY, UJ all opened with a gap. From experience, does price always fills the gap, and what normally causes the gaps? So as I explained yesterday, there were quite a number of pertinent risks that were expected in the markets, especially in Japanese yen markets, as well as markets that are currently affected by the dollar and markets affected by oil. So over the weekend, we were expecting a speech from the Bank of Japan Governor, Kazuo Ueda. We were also expecting CPI data from China, which came out on Saturday. So we know that how the market prices are set is not a couple of guys who sit down and say this is the market price for Euro USD. What we normally get is basically the lowest seller in the market and the highest bidder in the market. So on Friday, since these guys did not know what would happen over the weekend, so instead of leaving their orders in the market, they just withdraw those orders and then they come and place new orders on Monday morning. So the guys who are determining the price on Friday removed their orders, and when you come back on Monday, the guy who was, let's say, the lowest seller on Friday is no longer the same. It's another guy who is the lowest seller. So that basically means a different price. So the guy who was the highest bidder on Friday is no longer the same guy who is the highest bidder on Monday. So in that case, you find a completely different price. And that explains why we have a gap. So once they figure out what happened on Friday, then they implement new orders to make sure that they don't take such weekend risks. So gaps don't always close. There's a very common saying that people say gaps always close. As a person who have been very experienced in the markets, I know they don't always close. So there are different types of gaps in the markets. Some of them are runaway gaps, others are exhaustion gaps. So some of them will close and you might trade them for a while and it's consistent and they're always closing. And then later on you realize that they are not closing, especially when the markets are trading in strong trends. AUD-USD analysis, I think that we have already done. Is it better to trade oil, US oil or UK oil? They are all like 99% correlated. So I always try to focus on Brent oil. I noticed the spreads on UK oil are higher. I don't know about that. I would have to investigate. Hi Mgaza, hi Wanyama, Laiboni, Jack, Roserain, and Hazan. Thank you guys for joining the session. I can see Sue Jones and Saina. I appreciate having you guys on this session. So thank you for your time. I appreciate your responses and I hope to see you on the next session. So remember, we have a new episode of the Bullish Banter podcast. It's out, so you can check it out on YouTube. You can check it out on your favorite podcast platforms. That would be Spotify, Apple, Google Podcasts. And in the latest episode, we basically discussed about trading psychology. So if you have had challenges in your trading psychology, make sure you listen to the podcast. And of course, today being Tuesday, you get the advantage of having another bonus episode happening at exactly 4 p.m. right before the New York Open. So make sure that you follow and subscribe to the YouTube channel so that once we are live, you will get a notification and you'll be able to join the session in time. So thank you guys. See you then. PPI and CPI, what's more volatile? It's always the CPI. CPI is the new NFP.